Hopefully you can see my screen. I'll just turn around. Yep, brilliant. Okay. Oh, good. Right. Okay. Let's just move that out the way. As Anna said, I'm on cable, and I've got the usual multiple timeframes. I've got 15-second up here, which is pretty quick. I've got the 1 minute, the 5 minute, the 10 minute, the 15 minute, and the daily. There's several reasons I'm on cable. First of all, in the last hour or so, there's been a nice move higher. It's been relatively steady. And there's two things I really wanted to highlight here. First of all is the importance of the session crossover, because if you have a nice trade going, you've maybe got in earlier in the session, you're trading through European Open, and you've got some decent pips in the bank, and you're coming through to the London Open, expect volatility, expect reversals, expect an increase in volume, and it's precisely what we got. And you'll see this in not simply cable, but virtually all currency pairs. London's the biggest market, deepest liquidity, and you get volatility. And you get volatility, you get trap moves, you get reversals, you get all sorts going on. And this is 8 o'clock. Nice thing about Ninja Trader is, bear in mind, this is a fast chart. This 15-second chart I've got up here. But bear in mind, this is 8 o'clock. So on the Ninja Trader platform, it prints the real time. So it's very easy to pick off where we are. So this was the London Open. We're now trading into London Open. So we've got volume here, which we compare like for like. We're comparing apples with apples, not apples with pears. And this is what we see every single day. Not always the same pattern, not always the same trap move. Sometimes it'll go the other direction. Sometimes you get volatility on top of volatility. Sometimes you get volatility and then congestion, no trend developing, or a pickup in the original trend. All sorts of reasons, but this is the key. Here we are, 8 o'clock, 8:01. We're on the 1 minute chart. Bang, volatility triggered. Now what are we seeing? We've got support below here, so we've got a decent support level in place. Traders jumping in here going short. Now they've been trapped. Markets going in the other directions, continuing in the original direction, moving up through low volume node. On up we go. So this is classic price action at the London Open. Volatility, ton of volume coming in, trap moves, congestions and reversals. It just happens every single day. And those traders who jumped in short are now going to regret it. But if you were long and you've closed out your profits and you've just sat there ahead of it, maybe 5-10 minutes ahead of the open, maybe 15 minutes, depending on how close you want to get to the crossover point itself, you're quite happy, because what have you lost? The answer is not a great deal. A handful of pips maybe. Now, if you want to jump back in again, the cost of getting in is peanuts, let's face it. And you haven't had to sit through the stress of seeing the volatility, seeing the reversal, seeing the pressure against you, seeing the loss of profit. And now you're just waiting for the point to jump in at again. Now, the other point about these charts is this. When you go down to a multiple time frame like the 10 minute, for example, what are we seeing in terms of the development of this trend? I was going to use the term longer term, and when I say longer term, it's all relative. I'm talking here about the minute charts, the faster charts, not in terms of the daily, but in terms of the longer term. What are we actually seeing in terms of this slow time frame? 10 minutes, if you're a scalping trader on a 15-second chart or 1 minute chart, 10 minutes is a long time. What are we seeing? Well, we've got the volume point of control sat here. We've also got a resistance level coming into play here above. We've got a platform of support below. But the key point is that we are at the volume point of control for cable at the moment on the 10-minute time frame. And therefore, as a scalping trader, what we're expecting is congestion. We're expecting this sort of pattern of behavior, because whenever a price action reaches this region, because it has the heaviest concentration of volume, which you can see over here, hence the reason the volume point of control sits there, is that as a price approaches that region, because it is the volume point of control, in other words, the point at which there is price agreement, it is the fulcrum of the market at the moment. You can think of it in terms of analogy I've used many times before, is of a seesaw where you've got two people of equal weight sitting on the seesaw, so the seesaw doesn't go anywhere. It's in equilibrium, in other words. But as soon as one of those individuals gets off the seesaw, maybe a lighter person gets on or a heavier person gets on, that is when the price action starts to move away and develop some trend from the volume point of control. And you can think of it in those terms. And that's why trading in multiple timeframes is such a key plank of any trading. It doesn't matter what you're trading, what instrument, what market, it is just so key because it gives you that information. You know, if you're looking at the 15-minute, what have we got on the 15-minute? Well, we're well away from the volume point of control in that time frame. And in terms of moving longer term up into the 30 minutes and the hourlies, for example, the volume here is falling away. So if cable is going to develop into a longer term bullish trend, then in terms of the ease of progress through this region, it should be relatively straightforward, assuming we get decent volume down here driving it. The volume is falling away on the histogram, and therefore, from a trading perspective, using volume as the metric, in other words, volume in terms of support and resistance, in other words, is there a lot of volume in this price area, which is going to act as resistance to progress, then as cable moves higher up into 2490 and 2500, progress gets a lot easier for the pair to move through that region. So it just gives you all those bits of information. And then of course, you're looking at the volume profile that's developing. You're looking at the indicators. We've got the trend monitor here. You can see it's bright blue on 15. We had a little bit of a hiccup here, went into darker blue, but it's come out the other side again. So it's just confirming on the minute chart that we are in a bullish trend. Just move that up a little bit, makes the volume a little bit more demonstrable. You can see it here. We've now trickled through into the 5 minute. So the 5 minute is confirming the fact that what we saw here at the open, this volatility, we've actually seen some support come in there. We've got buying coming in. We've got decent volume under here. We're pushing up, developing further. And what we're starting to see now down on the 10 minute is that trend monitor is beginning to transition through from where we were in a bearish position into a darker color phase. And ultimately, if this trend is going to develop longer term, then of course the trend monitor will transition right the way through, and it will ripple through into the 10 minute, ultimately into the 15 minute, and so on and so forth. And finally, at some point, it will end up down in the daily chart, assuming this is a reversal from what has been a bearish trend on the daily chart into congestion out the other side into a bullish trend. And that's really just the principle that applies to any chart, any time frame. And it is what the trend monitor does. The trend monitor is one of those key indicators. It helps to keep you in through these pullbacks, through these minor reversals. It just takes a longer term view on the perspective of the trend and whether it has truly changed or whether it is just a pause point in the longer term trend. And the other point about it is that when you apply volume price analysis, which we explain in detail in the program, volume price analysis is not only the methodology to help to keep you in, to highlight reversals, to highlight strong buying, strong selling, anomalies and everything else, but what it also does, which is a key part, is that in the development of trend where you're looking at a primary trend either higher or lower, and then you get one of these pause points, that is the point at which volume price analysis comes to the fore once more, because it helps to identify whether the reversal you're watching is a secondary trend. In other words, it's only a minor reversal or a minor pullback, or whether it is indeed a reversal from a primary trend lower to a primary trend higher, or vice versa. And it's just it's one of the purest forms of the application of VPA. We explained it in detail in the program. And the reason it's so important is very simple, because the issue for most traders is not about getting in, it's about staying in once they've got a position in the market. That is the hardest thing to do in trading. Getting in is very easy. Let's face it, you just click the button and you're in. The hardest part is once you've got some decent profit in the bank, it's actually staying in and maintaining that to try to maximize that position in whichever way you can. Because as soon as you get a pullback against you, the emotion kicks in. It's one of the most powerful emotions. It's the emotion of a loss. Something you thought you had is now draining away, and you close out. And in closing out, you are basically taking a small profit, which is fine. But if that is counterbalanced by small losses, which it will be, You are just building up a trading profile, if you will, of small profits and small losses, and the small losses will probably outweigh the small profits anyway. So you will essentially either be flatlining or sliding backwards in terms of your progress forward in your trading account. And that's why it's so key, because if you can hold through these phases of price action where it's reversing, trending back against you, you're seeing some of your profit disappear, but you know you have to stay in. It is indicators. Trend monitor is one of them, with VPA, which explains how to identify what is a primary, what is a secondary, and therefore helping to keep you in. And that is the way to help to grow your account. It is the hardest thing to do, bar none, to actually stay in through congestion, stay in through pullbacks, reversals. You know, there's no easy way around it. You just have to find mechanisms, and the two of them are using indicators like the trend monitor. You can see here it's starting to transition through into blue in conjunction with volume price analysis. Now, one other aspect of this chart, just want to highlight that before I flick back to Anna. It's dropping down onto the daily. When we look at the daily chart, I know a lot of the students in the room, this is what they do. They plan their day ahead. They study charts at the weekend. They'll spend a lot of time looking at levels. Have previous levels been taken out, and so on and so forth. Again, it's a key part of volume price analysis. It's a key part of forex trading. But what I just wanted to highlight here very quickly is on the daily chart. And when you look at the daily chart, you're constantly looking at the potential signals of either strength or weakness. We had this move higher. Then this day we start to see a little bit of weakness coming in, decent volume under that particular candle. It carries on a little bit further. Then we see another repeat of that, this time a much more demonstrable candle. We've got higher volume on this occasion, very narrow price spread, a lot of weakness coming in. You know, the market's trying to rally and it really is looking pretty weedy and weak. You get the reversal the following day. That's not to say this always happens. We could get congestion, but essentially what that is telling you is that this market is not terribly strong right now. It's not looking good longer term. You know, this market's not going to roar up unless there's a collapse in the dollar. We saw the reversal the following day, good volume under there, a little bit of congestion building here, so expect some sideways price action, which is what we got. We had a rally, that's okay, fine. But the following day, we get another signal of weakness. And again, it's similar to this one. You've even got a pivot to the top here as well. So it's just confirming that. You've got good volume under here. The market's trying to rally again. You've also got decent volume sitting in here in terms of volume point of control. So it's trying to force through this wedge of volume here and is really struggling. And then we get the move down. And when you're up at this level, if you're looking at this thinking, well, where is this market going to go? Well, it's pretty clear on the daily chart where it's going to at least pause. And that's down at the volume point of control, which is sat here just below 124. So in terms of, you know, the daily time frame, if you were trading dailies, or if you're simply looking at it to get the right direction of the intraday trading perspective, the best guesstimate looking at it from a technical perspective is that, you know, we're going to end up somewhere down here. If we go through that volume point of control, we've got a very strong platform here on the accumulation distribution indicator, which looks at support and resistance from price-based perspective. On the VPOC, you're looking at it from volume perspective. On the support on the accumulation distribution, you're looking at it from traditional price-based perspective. The difference is with the indicator is it actually presents that in terms of the strength of that region, because it presents the level in terms of thickness. So in other words, a wider level is a stronger region, a narrow level here, or a thinner level, is less strong. So you have an immediate sense of where the stronger levels are and where the weaker levels are. You can see this level here, not very strong. It was tested once. There's a little one over here, you might not be able to see it, but that's been tested once. Now, if the market comes back and tests that repeatedly, that will strengthen accordingly, so it will become ever thicker. And that's what's happened on this level. It's been tested multiple times. It's quite a thick level. And therefore, in terms of where the market is heading, if it was coming down, it's coming to the VPOC. If it goes through the VPOC, it will certainly find some price-based support at this region. So it's all about looking at the daily chart, trying to get a view, get a sense of where that market is heading and where it is like to pause. And also, even from an intraday perspective, I would urge you to look at the daily chart. Consider the daily chart, take a view on it. You can even go down to the weeklies to get a longer term perspective, but certainly the daily should be in your to-do list every day, if you will, even if you are a scalping trader, because it will give you a view on potentially the direction that the markets are going to be headed in. And then, of course, you bring in all the other elements of sentiment. You're looking at whether that particular pair has been driven in both directions. And finally, just to pick up that point, you can see we're driving higher. We just go to the currency indices. These are the individual index charts for the currencies. And if I just flip this over onto daily, this is what's going on at the moment. You can see this is on 15 minutes, so this is the CSI. So I've got pretty much everything here I need. This is the buying we're seeing in the pound right now. This is the selling we're seeing in the dollar. So we've got a perfect example, if you will, of what we're looking for. We are looking for strength in one, counterbalanced by weakness in the other, because that is what will deliver the strongest trend for you, bar none. Because you are dealing with, and again, using the two trains analogy or metaphor, if you like, where you've got two trains traveling in opposite directions. Their closing speed is enormous. If the two trains are traveling in the same direction, as for example they are here at the moment in terms of pound Aussie. So if you're looking at pound Aussie right now, the Aussie is starting to track up, so it's tracking with the pound. So the trend in that particular pair is not going to be terribly strong. But in terms of cable, it will be very strong because pound is rising strongly and dollar's falling strongly. But what I actually wanted to show you was this. Just flick this over onto the daily time frames. And this was yesterday. So what are we looking at in terms of what was driving that move for cable yesterday? We've got the dollar falling here very strongly, and we've got the pound rising very strongly here. So it's just, you bring all these things together, and of course that that would have been reflected through the various time frames on the CSI, probably onto the hour, maybe up to the 2 hour, 4 hour, whatever. And that's what you are looking for all the time. You're trying to unravel this aspect of forex behavior, which is to identify which currency is driving, and if both are driving as they are at the moment. Certainly we're seeing. We've also got the yen falling here, as you can see over here. So we've got the yen falling, we've got the dollar falling quite strongly here, or very strongly. We've got the euro rising strongly here as well. So there would be certainly some prospect of trend there as well. But again, just going back to this point, you wouldn't look at euro pound, for example, because you've got buying on euro and you've got buying on pound. So you'd look at euro dollar. So you've got buying on euro, selling on dollar. I'm just going to pause there because I've been rabbiting on for a long time. Let me pass back to Anna, if I may.